Ahoy there, traders. Welcome back. So it's Friday morning. As usual, thank you for taking a moment out of your day to spend it with little old me. Let's think about strategic mastery. I probably should have thought of a better name for this. We're going to look at how do we take some of the things that we looked at earlier into a strategy, because the first part of today's session, it was more like observational things. So how do we take that? Oh, the observation, the bit on the right looks like the bit on the left. The spot the difference thing. That for me is usually how most trade ideas start. So thinking about strategy development, it's always going to start with an idea. Again, I've just got one slide, as we're actually going to be spending most of the rest of the time on the chart, so you can kind of see the thought process, or at least my thought process. And there's no definitive right way of doing things, but I always believe that you should start with the idea and then validate it observationally, pen and paper, flicking through the charts. Because if you try and then skip to the last step, the codify the trade, the automation side, Dan, if you try and do that first, then you're going to miss out on the validation. Because what you get from making observations and flicking through, and actually, then this is the only time that you will flick through charts, because what you get from doing that is understanding the nuances of the idea. So you start with the idea. It's very loose. It's very tenuous. You can use tools to, as we saw with my percentage R and the moving averages, you can use tools to support the idea. They're not essential. We looked at a price pattern, but if you need an indicator or a tool to help you with that, you can certainly do that. It's not essential, but maybe it speeds up the process. And certainly from a scanning point of view, you're probably going to add things like that in the future. But there's lots of tools out there. So no single right tool. You want the tool that's going to help you accomplish the goal being the idea of what am I looking for? It's like if you were plugging in, if you like, I'm old school. I actually know how to read a map. I was taught how to do it. I've done the cross country thing. I've done navigation competition, all that nonsense when I was younger. It seemed like a great idea in my early teens. But nonetheless, I can read a map. It seems like a lost art these days with sat-navs. But nonetheless, you still need to know the destination, whether you're using an actual map. You've got to know where you're going on a map or on a sat-nav. You need to put in the zip code or the postcode. You've got to put the destination in. And that's what the idea is. What am I looking for? And we spent the first half of today's session looking at example of that. What's the footprint? What's the idea? Oh, you know what? I've seen this a few times. Maybe I can profit from it. Let's see if there's a tool that'll help me find more of them with a little bit of consistency. So that's going to dictate the tool that you use, the choice of tools. And then you can start to make observations. You can validate the idea. And now you're looking for it. You might be thinking, you know what? I can see that this happened 5 times in the last 5 days. Has it just happened in the last 5 days? So maybe you go back through the last 5 weeks. So that's the observation. You're starting to see that, oh, actually, this has got legs. So you make observations. So you have a look over the last 5 weeks. You know what? It's appeared 50 times in the last 5 weeks. Great. Let's just skip back 5 years ago on the data on the chart. Again, whatever you're looking at, if you're looking at intraday data, just pick a random 5-week period 5 years ago, 3 years ago, 2 years ago. See if it happens, because it's happened 50 times in the last 5 weeks. Again, I'm making the number up, but that's a pretty significant number. Let's see if it happens regular consistency, because maybe it's just a short-term anomaly. Maybe it's only happening right now because of the election, because of the weird shit that's going on in the world, a high volatility environment, we'll call that. So maybe it's not something that happens every day. Maybe it's something that happens on the run up to elections. Maybe it's something that happens after a high volatility event. It could be a crash. It could be the weird shit that's going on in the world right now. It could be the China thing a couple of years ago. The China thing, I'm meaning the trade wars is what I mean by that. So a high volatility environment where there's a little bit of uncertainty, political term. So that's what I mean by observations. So you don't get that. You don't get, let me just tidy that up. You don't get the make observation parts, and you don't validate the idea if you jump straight to codify. And what I mean by codify, it's that production line that we went to. But you could, again, I'm not a coder, so I kind of stumbled across this as a happy accident. Some people are coders, programmers. My business partner in the States, he's a coder at heart. So for a long time, he jumped straight to, let's code this bad boy up. Let's codify it. Let's actually write some code to look for the ideas. But you miss the observation, because on paper, it then may look like, oh, it's a shit strategy. It constantly loses money. But the reality is it does make money, but only in the prior 5 weeks to an election. So you've got a once every 4-year strategy, or a once every volatility event. A volatility event, a crash, a huge sell-off, a move greater than 10%. We've looked at that in a past workshop. You can go back and look at my 25-year study on crashes. They happen once a year. A move greater than 10% is a volatility event. It happens once a year, typically on average. And the big one, the 30%er, like we've just seen earlier this year, that happens once every 10 years. Give or take a year. They happen in cycles. So maybe we need one of those events to help with your idea. Make observations, validate the idea. So don't jump automatically to, let's code an idea, because making the observations, manually just checking and validating. I'm not saying, if you don't want to go through 10 years of data manually, I have done, I spent a long time doing it, but you get to spit and polish, you get to refine, validate, and optimize. And that's the important part. Spit and polish. You get to refine, validate, and optimize continuously. So you'll have a new idea. Oh, because you've made an observation, and then you can refine it, validate, and optimize it more. And then you can refine the idea. You can make more observations. Then you can refine, validate, and optimize. And it's that cycle. And this could take a week. It could take several weeks. For me, you take about 2 weeks, 2 weeks to say, you know what, this has got legs. Let's now codify this bad boy. Then we can start trading it. Then we can start profiting from it. And looking back over my shoulder, I've got literally folders, books, journals. That's the word I was looking for, of ideas that I've done this with since 2004. I've been refining, validating, and optimizing strategies for years. It was almost a hobby because, again, if you remember last week from our 12, the dirty dozen trading rules, one of those was keep idle fingers busy. This is what I did to keep my idle fingers busy. I refined, validated, and optimized dozens, if not hundreds, of strategy ideas. And what you'll find is, and I know 1 or 2 people who are watching this right now are going through this process of refining and validating and optimizing their own, either their own strategy or their own version of my strategy. They're developing it for their personality, the things that they want from it. You'll start developing frameworks that you can use. Because I've got a way that I like to trade, and I don't deviate from that. And I need to do all my, again, this kind of links back into last week's workshop as well, 12 trading ideas. So I need to validate the strategy, but then I've got to do it within my personality. So not only do I have to have an idea, can that idea fit in with my personality? Because I want to be done in an hour a day, maybe 90 minutes. Because if it can't be done in an hour, along with all the other shit that I'm doing already, because I'm already got the core trade, I've already got my theta burning, I've already got my gamma running, I've got another strategy that I'm doing. I'm going to call it Netflix rentals. I've got a strategy. I'm gonna explain another strategy now. I'm calling it the apple peeler. I like stupid names. get over it. But they all need to be done in an hour to 90 minutes. Now you can break that hour up into 4 15-minute segments. You can break the 90 minutes up into 3 30 minutes. If you want to do it all in 20 minutes a day, that's the personality of a trader. That's the thing that we spoke about last week. What's your, the 12 trading rules? You've got to have those restrictions, because I don't want to spend, again, let's go back to my promise to you earlier. I do not want to spend hours flicking through chart after chart after chart, looking at bullshit trading ideas. I just want to zoom in and go, there's the trade right there. Just like we did with LB. And this is my attempt at a segue to go to the charts, because I've been talking far too long on this. So that's what we did on LB. It's like, there's the trade right there. Right there. That's the trade. That's what I'm looking for. Great. Let's put the trade on. That's what I want to do. That's the experience. That's what I mean by the actual act of trading is scan it, look at 1, look at 2, look at 3. Oh, LB looks the best one so far. NVIDIA, there's 4. Autodesk, Autodesk looks a little bit shitty. If I could just choose one, which would it be? LB. That was my hell yes trade. I'm going to be placing that after I've pressed stop on record, stop on this session. So that's what I mean by hell yes trade. It takes longer to explain than to actually do. So what am I looking at right now? So what I wanted was a short-term strategy. Again, my idea was Apple's a good trader. Historically speaking, it is a great, everything I've tested on Apple, it trades fabulous. The only thing that doesn't work well on it is not necessarily counter trend, but reversal strategies. Although I'm working on that. But what I wanted was, okay, I'm looking for a trade, and I was watching the 5-minute charts, and I was thinking about my first strategy, my first day trading strategy. My first day trading strategy was wait for, let's assume that this is a daily chart, wait for the break of the previous day's high, and then trade the first pullback. Wait for the break of the previous day's high and trade the first pullback. That's it. So what you're doing is you're trading the opening bell momentum. So you just want a trade that lasts about 20 minutes, maybe up to 1 hour. Does everyone get that? So that meets the requirements of it's got to all be done in the first hour of the day. So if I'm looking for a day, and as you can see the same thing, wait for a breach to a new high, same principle, wait for a 50, this is an investing version of the same thing. If you wanted to use the same principle with investing, wait for the 52-week high to be breached and then trade the next pullback. That's a perfectly valid strategy. So it's the same principle if you wanted to be an investor, which is what a lot of investors look for. They look for stocks near or at or having just breached a 52-week high. Trade the next pullback. So we can take that same principle and let's look at it on a 5-minute chart. So what I started off with, let me just put Apple, again, it works on Microsoft, it works on anything that's liquid and moving. So what I'm looking for, so these blue lines here, I want to be done. So this tells me that's the first 20 minutes of the day, the first 20 minutes of the day. So these horizontal lines are the day's highs and lows. So they're up to the first 20 minutes of the day. I'm sure everyone gets that. And then this red line is 2 p.m. So it's at 10 a.m. Eastern, 2 p.m. Eastern. And it just means that I can very visually and very quickly see where, if I'm going to back test this, I can just say, it gives me a reference point, a line in the sand. So I've got 10 a.m., 2 p.m., 10 a.m., 2 p.m., 10 a.m., 2 p.m., 10, 2. And again, I can look back over the last few days. So what I want to do is I want to see if there is a trade opportunity. I'm looking for that breach of prior swing highs. I don't necessarily need the break of a previous day, although they are going to provide the better opportunities. So as price goes below a prior low, trade the first pullback or trade the next pullback. So we can find these opportunities that happen all over the place. So the dotted line is I won't reveal it at the moment, but it's a proprietary tool. I'm lying. It's not. I said proprietary. I didn't mean proprietary. It's proprietary settings on a default tool. You can get this as standard on most platforms. But what I'm looking for is in that first 20 minutes of the day. Can we see that there's one of those reversal V's over on the left? So we've got breach of prior swing highs, prior resistance. We've got price pushing higher in the first 20 minutes, so prior to the blue line. And this is the pattern that I used to trade. And then we're looking for the next 20 minutes or maybe up to an hour of movement. All we're looking for is the opening bell momentum. Opening bell momentum. So can everyone see that? So this is a good example. There's the setup. There's that V-shaped pattern. The first 5-minute bar has a nice spike, a nice sign of exhaustion. So it's got a nice little turnaround. We've got a pullback, which is great. And then we've got the price pushes higher for the next 20 or so minutes. If you look at the scale, it should be about $1. And if you wanted to trade this on Microsoft, it's about the same. It's about $1, $1.50. So can everyone see that? That is what I'm looking for. There's the footprints. Let me pause there for dramatic effect. Can everyone see that on the left? That's the idealized version of the pattern. Unsurprisingly, it looks very similar to what we were just doing on the daily chart. So what you should be seeing, folks, is that it doesn't matter what the time frame is. It's just when you give yourself those 12 trading rules, the lifestyle trading restrictions, I want to be done in 20 minutes. I want to be done in an hour. I'm at the desk anyway. I'm looking for a trade in the first hour. If it's swing trading, I've probably been watching it a few days. I'm just putting the trade on. But as I'm at the desk, there's a day trade. And maybe I can catch $1 movements on Apple. Maybe. Not quite in the same way, but can everyone see that there's a similar setup there for about $1? And it happened in about the first 90 minutes. So this one is an example of, it doesn't quite look, it's a little bit sloppy, a little bit messy. Doesn't quite look exactly the same. Perfect example on the left, number 1. Sloppy example, number 2. It kind of meets the requirements. Now here's one that didn't work out. So we have that first bar of the day, one of those exhaustion bars. We have the rally and the pullback. Doesn't go above the pullback high. So it sets up, but doesn't trigger a trade. That's it. Walk away, come back tomorrow. Does everyone get that? So 3, good example. So number 1, perfect textbook example. Number 2, sloppy, messy. Maybe I do, maybe I don't take it. Number 3, sets up and voids. And we've got a good example here. A little bit sloppy, a little bit messy. Probably would stop you out. Again, over the first hour. Number 4, we've got a loss. So we've got ideal. We've got messy, we've got void, and we've got stopped out, lost. You're going to be closing trade. So we've got a good example here. Again, just to timestamp this, if this is the 5th of October. Again, I appreciate I'm recording this, depending on when you're watching this. This is the 5th of October. So if you want to go back and look at this, we've got 5th of October. We've got 1, 2, 3, the subsequent 4 days on the 5th of October, all the way to the 8th of October. Again, just for the recording more than anything, because obviously we're looking at this in real time right now. So we've got a good example of ideal on number 1. Number 2 is a messy example. Number 3 is a void. And number 4 is a stop. So we've got really good examples of how we can find those opportunities. Again, all we're looking for is a momentum move that would last 30, the setup, first 30. The second 30 minutes is the trade. And we're looking for a $1 move, the momentum of the morning, MOMO. momentum, not the stock. That's what we're looking for. I'm just abbreviating. Does everyone get that? Again, I appreciate my usual thing is swing trading, but this checks, if you want to day trade, this checks all the boxes. On Apple, it might set up anywhere between 1 and 3, as we see, between 1 and 3 times a week. Not all of them will trigger, not all of them will work out, but it checks that box. If I'm at the desk right now, as you are at the desk right now, and you're looking for a little bit of a punt, a little bit of a quick hit, then this is what we can do. You don't need to worry about pattern day trader rules. If it sets up between 1 and 3 times a week, like, it's not really set up this week. So you might have a week where there's no trades. But if you're at the desk, has it set 10 o'clock, first 20 minutes of the day? Has it set up? Yes or no? No. Okay, come back tomorrow. Has it set up? Yes or no? Come back tomorrow. Has it set up? Yes. Great. Put the trade on. So pattern day trader rules say that, Duncan, I'll actually come on to this. You can do it with spread betting, obviously. You can do it with shares, or you can do it with options. I'm going to show you with options right now, and you'll see how, insert your expletive, how cheap it is. Inexpensive to do. So we're going to look at how to put the trade on. But I just want to just pausing here. So if you're taking screenshots, you can see we've got ideal, messy, void, stop. We've got a good range of like the 4 possible scenarios. So thinking about strategy. So now what I've got, coming back onto it, now what I've got is a footprint. I've got a good idea of, I've got the perfect scenario. I've got the messy scenario. I've got one that voids, and I've got a stop. So what I could start to do now is I can go back through last week, the week before that, the last 5-6 weeks, and just validate the idea. Again, remember, I'm looking to kind of speed the process up. Is this just something that happened in the last week, or is it something that happens on a regular basis? If it happens every other day, what's the event? Maybe I need a gap on the stock to trigger the move. Maybe I need the previous day's high to be breached, or the previous day's low to be breached to find these momentum moves. Well, maybe that's true, maybe that's not, but that's one of the things that I might be checking. I'm just going to have a childlike and curious mind to explore the possibility. And I can use tools. And again, all the tools that I've got here is, I've got a little, to be fair, I had a custom tool built, and it plots the vertical lines at 10 a.m., and 2 p.m. And it just plots them automatically for me. You can have something coded up if you want mine. If you've got TradeStation, I'm happy to give it to you. It's just a little widget that I can have place to trade. Help me to use indicators, use tools to help speed up the process of this validation part. Validate, optimize, develop the idea further. So we've got good examples of all the things. So again, you can go back, continue to look back at these things. We've got good example. There's another good example. If you look at the scale, it's about 75 cents to $1. You know, same things. You'll see the same thing happen at 2 p.m. There's also some 2 p.m. Whoa, look at that. There's our retracements in an uptrend. There's our retracements at 2 p.m. And there's another dollar movement. So it does happen in the afternoon, a little bit of a lesser way. So we might get a couple of trades in the day, once or twice. So we can look at these same things. Now we've gone back to, that's the same thing. There's the first morning move. We've got the retracement. There's our V-shaped pattern. And there's our 2 p.m. Setup as well. So we've got the 10 a.m. and 2 p.m. approximately on the time slots that these things happen. So if you want to develop that further, again, this is a strategy that I do use, I have used. This week, as you can see now that you know that, it's not really set up. We've got the push, the pullback. It kind of did it earlier in the week. Again, not the best example. It took a little bit longer than I would have liked, but nonetheless, it did set up. I didn't end up taking this one because it timed out. I wanted to go to the shops and do something else. So just in the interest of disclosure, I was looking at this, it timed out, and I just went and did something else. Benefits of hindsight, of course you would have taken it, but I just don't want to be at the desk all day. That's my requirements. Push, pullback, again, there's the void. We've got the push, pullback, there's the void, push, pullback. Again, there's another one that timed out. So right now, the first push is down, and it could be setting up a bearish trade on Apple. So that's what we're looking at right now. It's not yet fully complete, but we've got a partial pattern, and we know that it could produce a dollar move, a little bit of an exhaustion bar. That could be interesting. Now, I might suggest some downward movements, but I'm looking for a break below the low there, and I'm looking for at least a $1 move. So if we're at the 100, if there's $120, it's only got to go there. $1 move. 1,000 shares, $1,000, 100 shares, $100. 5-minute charts. Yeah, I appreciate your comment, Enoch. 5-minute trading. It's what I'm trying to illustrate, because your comment is it's extremely time consuming. I've just proven to Enoch, it's not time consuming. At 10 a.m., has the trade set up? Yes or no? No, go and do something else. At 10 a.m., has the trade set up? Yes, put the trade on. Come back in 20 minutes. Yeah, so it's not, I appreciate your comment. You think it's time consuming, and the old way of doing it is time consuming, because we're taught by people who never trade, people who don't fucking do this, textbooks, authors, idiots who've just copied someone else doing something. Validate the idea. I've just proven that it's not time consuming. Yeah, so managers, you've got a target. We're looking for $1 on Apple, looking for $1. What does it normally do in the morning, the first hour of the day? It normally does between $1 and $3. So if it takes $1 to $2 to set up the trade, that gives me another $1 for the pop. Validate the idea. Yeah, just put it on, come back, trade on, 10 a.m., trade sets up, trade goes on, looking for $1. If in 30 minutes, if that's not triggered, cancel it. So at 10:30, we've got 25 minutes for this to trigger. If it doesn't trigger in 30 minutes, walk away, cancel the order, come back tomorrow, or Monday in this case. I'm really pleased, Enoch. Everyone, I'm going to call you out, Enoch. Enoch, I'm just looking at the comment. I don't know if you can see the comments. Enoch's just had a little breakthrough here. I'm just showing that on the recording. You might see it on the recording as opposed to anything else, but it looks like you've just had a breakthrough, Enoch. I'm really pleased. I hope everyone else has had a similar breakthrough. Day trading is not time consuming if you don't want it to be. I just want to trade for the first hour. Why? Because I'm already here. It's no extra effort. So at 10 a.m., has the trade set up? Yes. Put the trade on. Great. Entry below the pullback low. First target's $1. If you want to be a smart ass and trail it behind, again, good example over here. If you put the trade on there, trail it behind the 5-minute lows. After $1, trail the stop loss 20, 30 cents and trail it up. See if you can squeeze an extra 50 cents out the move. All you're looking for is the momentum of the morning. The first hour of the day is when the most momentum is. Oof. Right, we're a little bit over. I'm going to finish off what I promised, which is let's take a look at the options. So I'm going to do this with options. As price goes below the low, I'm going to buy a put. Buying a put is the same as selling short 100 shares per contract. If I was to sell, if you've got a cash account, if you wanted to, assuming that you can sell short, I wanted to buy 100 shares or sell 100 shares on a cash account, it's going to cost me 100 times $120. That's my cash requirements for an account. If you've got a margin account, I think the margin's just in a little bit instated. Maybe you're paying 20, 25, maybe you're paying 50% margin on your stock at the moment. So let's just assume that it's a cash account, because again, because of the weird things at the moment, depending on your broker, there's going to be a little bit of difference between the margin requirements. So you're going to need $12,000 if you wanted to trade 100 shares. I'm saying 100 shares. You could buy one share and it would cost you $120. And that's okay. If you want to do that and you get $1 movements. So if you buy one share and you get your $1 movement, you've made $1. You know what? That's not going to make anyone happy. That's just going to be fucking depressing. Let's face it. So I'm going to go over to options. Now, with an option, I don't need time. So what I'm looking at here, I could go all the way out to January 2023, or I've got these options here that expire today. If I want to buy a little bit of time, so normally that second one, I've got 7 days on the second one before that expires. So I can either use the top one or the second one. Most of the time, you're going to have an option with 3 to 5 days expiration. We don't need 3 to 5 days. Let's go and look at these options expire today. Don't be scared off by this. I've got a little bit of a division there. You can see that it's a little bit dark. It's gray background there. It's black on the background there. This is just where the current price is. So last price is $120. Calls are on the left. So calls are like buying shares. Puts are like selling short. In both cases, I'll be a buyer. I will buy, I will be long an option. You will not be selling options or shorting options. That's collecting premium. In both cases, puts and calls. I want to emphasize this. I'm giving you the back of the envelope version of this. If options are brand new, you will always be a buyer. Never, never, ever sell options until you know what you're doing. So buying, say, emphasizing it for impact. Buying calls would be like buying 100 shares. Buying, saying it again, intentionally buying puts will be like shorting 100 shares. Cool. Why 100? Because we control 100 shares on the option. So let's just say that we've got our trade. It's going to trigger. I'm going to buy the first strike, in this case, below. I want to, because I want to short the first strike below the low there. So the first strike below, it's going to be, we're at $120.65. We've got the 120 strike is below. Now, if I was bullish, let's just say that if I was going to be a buyer and I wanted to place the bullish trade, the current price is $120.70 still. So the next strike above that would be 121. So if I wanted to buy, I would buy the 121 strike. If I want to sell shorts, I would buy the 120 strike. So that's where we're at right now. And this is referred to as the first strike out the money. OTM, out the money. So bearish. So the 120 strike, if I'm bearish, I want to short the equivalent of 100 shares, I can buy a put. Ask price, buy. Can everyone see how much I can control 100 shares for today? 35 cents. 35 cents. Guys, I'm sure you can appreciate I'm going through a strategy here. I'm over my normal hour. It is being recorded, so if you need to hop off because you're going to appreciate that not everyone's got the luxury of time like me, I can do whatever I want, but if you've got meetings to go to, then by all means feel free. It is being recorded, but I'm sure it's worth it just to kind of get the strategy in its entirety. 35 cents. Now remember, if I was going to buy 100 shares cash, $12,000. For 100 shares, it's going to cost me, oh, it's gone up. It's going to cost me 37, let's just say 40 cents. Let's just say, because it's selling off, I get in for 40 cents. It's going to cost me 40 cents per share times 100, because I control 100 shares. It's going to cost me $40. What would you rather do? Would you rather short 100 shares or would you rather buy a put? What would you rather do? Now, that's what it's going to cost me today. Now, in fairness, they expire today. So why don't we? We know that if we do this on a Tuesday, we're going to have a little bit of time. So let's go out. Let's go out to the next week. I've got 7 days worth of time. This is the most that it will ever cost you. The same $120 strike, and this is probably a more typical example. So it's because those shares expire today, that's why they're 40 cents. So a little bit of an exaggerated price point. So if I was going to control the same 120 strike, so I'm reserving shares at $120, buying a put, that's what the strike price does. Just like a deposit, I'm reserving 100 shares at $120. I can reserve them for $245. $2.45 times 100 is going to give me 245 shares. So $245. 245. So it's going to cost me $245. I'm sure you will agree. That's better than the $12,000 requirements. So all I'm highlighting here is if you want to trade this on a small account, you can do. You want to trade this on a small account, you can do. Now, you're not going to lose $245. So if I'm wrong, if I get in the trade and I'm stopped out, I'm going to lose between 50 cents. And if I really fuck it up, maybe I lose $1. But if I'm making $1, Phil, and I'm losing $1, well, hold on. This is the magic of options. You won't lose $1. It's only if it goes against you by $1. But over here, you might only lose 30 cents. Because the option is not going to lose $1 in value. It's going to lose a proportional amount. So let's check that out. So I've got this fancy little graph that will help me figure it out. Okay, so there's 3 lines here. I'm looking at the yellow line. The yellow line is the right now price. On the legend, the yellow line, keep an eye on these numbers. That's what I'm looking at. So if I buy an option and I've reserved the 120 strike and I want it to go from 120 down to 119, that's my $1. So let's find 119. So if it does what I want it to do, I'm going to pay $2.40 per share. So times 100 is going to be $240. I'm going to look for a $1 move down. So there's $1. So it goes to $119. I'm going to make, looking at the yellow index, it tells me what I'm going to make. I'm going to make $85. So I will make $85 per option. And obviously you can see we have multiples. If I want to make 85. So I'm going to use 240. That's not my risk. It's my requirements. I'm going to use $240 to open the trade. I've got the opportunity to make $85. Risk reward looks a little bit shit, Phil. Hold on a moment. But if it goes up 50 cents to $1, then I'm going to close the trade. So if it goes, let's just say that we mistime the trade. We enter on the thing, on the break of the low there, and we close it out because it's not going the right way at 121. So let's just say worst case scenario, it rallies fast, turns around, does a U-turn, however you want to phrase it, and it's moved $1 against you before you can do something about it. Again, so remember here, there's the $1 move down. I'm going to make $85. So let's say it goes from 121. We're at 121 now. We're already there. So let's say it goes up to 122. Let's say I put the trade on now. It's 122. So it goes up $1. So still up $1, down $1, make 85, up $1. Let's work that out. So it goes up to 122. I'm going to lose 49. Hold on a moment. Hold on a moment. If I put the trade on now and it goes down $1, I'll make 85. If it goes up $1, I'll only lose 49. So it's not linear is the point. So you've got a little wiggle room on the downside. So it's not quite 1-to-1. If I lose $1, specifically, if the stock goes up $1, I'll lose money, but I only lose $49. If it goes down $1, then I'll make 85. That's pretty cool, right? Does everyone get that? So my risk is not 240. It's only, let's just call it 50. It's only $50. Let me pause there once again for dramatic effect. My risk is 50. My reward is 85. My risk is 50. Perfect. That's it. So options aren't scary. day trading doesn't have to be scary. It doesn't have to be time consuming. I can use this graph. This is the Analyze tab. So if you want to place the trade on your broker, you're going to need the Analyze tab. You can work out, okay, well, if I buy that strike, and it's going to be the same most of the time. If it goes against me, I'm going to lose about $50. If I'm making it, I'm going to be making 85. And if I get a runaway move, because it will happen from time to time, maybe you get $2 or $3. So that could be interesting. So you can then start to multiply out. Instead of worrying about the cost requirements is $240 per contract, I can start thinking about the risk. If I want to risk $50 per option, because I'm going to close it out, I could basically trade 10 of those for $500 risk, or a little bit under for $500 risk. And I've got the opportunity then to make 850, maybe we get a little bit more, maybe 1,000, but we can start to risk 500 to make 850. You can multiply it up or, divide it down if you want to. You can start to think that, hey, I've got the opportunity. You're inside the pattern day trader rules. This is only going to happen 2 or 3 times a week. And to be fair, we're about 10 minutes before the bottom of the hour. This isn't looking like this isn't setting up. So I would probably be thinking, you know what? I know the pullback's there. If it was going to pop, we get the momentum trade. Because remember, we're looking for that. We get the momentum. It's looking, let me just find the ideal example. We're looking for the momentum trade. We're looking for that wallop. That's a perfect example. It's looking more like this right now. Again, not the best momentum trade. So I want more of them and less of them. So more of number 1 and less of number 2. So right now, it's looking like, you know what? That momentum to the downside's not there. So cancel the order, come back Monday. So that's where I'd be right now. There we go. We should have looked at Microsoft. Look at that. Look at that. Same trade on Microsoft. We've got the 1 there. Maybe you didn't take that, but certainly you've got the push and the pullback there. So maybe you didn't get the first one, certainly the second one, but that's what we're looking for. Maybe we should have looked at Microsoft as our example. Same type of setup. So here's how we can trade 5-minute charts in the first hour of the day from the entry, about 121.50, 122.50. So somewhere around there, it's going to get you $1 move. If you're in from lower down, obviously you can get that. So you've got those same V-shaped patterns that we're constantly looking at. The previous day was trending up. If you want to add a little bit of confidence and just do a little bit of chart reading, you can certainly, introduce that. It's above. Oh, there we go. It's above yesterday's high. Who would have thought that? Who would have thought that? So we've got the same type of setup. Again, Apple, not really the best setup. It looks like it might actually turn around. It might set up later in the day. If it went above yesterday's high, maybe we get the same setup. That could be interesting. So if you want to have a little look at that, if you've got a little bit more time, there's nothing wrong with trading after the times that I've mentioned. It's just that the majority of the time, the best times are going to be 10 a.m. and then 2 p.m. So 10 and 2. So they're the times to look at on Eastern. And again, we've got some good examples. You've got the pattern, but it's just how do we validate ideas? How do we profit from movement that meets our personal requirements? And we can start to validate ideas. We can start to look for opportunities relative to things. Now, the tool, the indicator that I've got in the background here, this helps me find those 2 p.m. trades. So the 10 a.m. trade, we don't need it, but the 2 p.m. trade, we do need it. So we've got plenty of opportunities through the day. Even on 2 stocks, Apple, Microsoft, it's going to cost us about the same on each. We're going to be spending about $250 for an option, but the risk is probably only about 50. And we've got the opportunity to make 85 to 100, 1.5 to 2 hours of risk, essentially. So that's the opportunity that is afforded to you. That's going to happen 2 or 3 times a week. Again, you can do this on a small account. Obviously, you can do this on a big account as well. But if you've only got a small account, then you can day trade inside pattern day trader rules quite comfortably. And make a bit of cash every week, a little bit of cash flow coming into the accounts. Right, that's it. I think I've officially finished. This is where I'm at, blowing the dust off some old strategies. This is one of them. I spent quite a few years just day trading the open. This is the pattern that I used. I used it in conjunction, as you heard me say earlier, in conjunction with the previous day's high. If we see the previous day high breached, the prior day is going up, then we've got the possibility of entering on pullbacks. And all you're looking for is that momentum, that first hour movements, and just trading for set up for the first half hour and trade the second half hour. So you're going to be done and dusted in about an hour, maybe up to 90 minutes if you get a nice morning trend. Again, it will happen. We saw earlier examples of that. I'm not holding out for it, but you should be able to get $1 out of these types of stocks. Maybe you get $2 out of Microsoft on a good day. And on Apple, if you get an absolutely boffing morning movements, then maybe you can get, last week you could have got like a $7 move out of it. It will happen from time to time, but I'm not hoping it will happen every time. So there's some good opportunities. Use it, don't use it. If you want to trade the same pattern on the weekly charts and the daily chart, that's where we started. You've got the same opportunities looking for breaks of 52-week highs, 52-week lows, previous month's highs, previous month's lows, previous year's highs, previous year's lows. You can use the same pattern if you want to have a more investment approach. It's exactly the same pattern on a 5-minute chart. A little bit of extra legwork required, but we want to be done and dusted in in less than an hour, ideally. Trade sets up, trade goes on. In the case of Apple, that would be voided for me, so I would chalk that one up as voided. In the case of Microsoft, that's running quite nicely. Maybe we get the dollar, maybe we don't. It certainly had that run depending on where you got in. But that's it. That's my Apple peeler is what I'm referring to this at the moment. But there we go. Have it, use it with my love. Zach, yeah, so just a question. I'm going to be here for the next few minutes. The official training has finished. So if you do need to go, again, now's the time. I'm just going to stay around. So Zach's question, can we explain why I was looking at Apple? Yeah, we've got the first push of the day was down. That's really what it was. Then we get the pullback. So nice and easy explanation. So we have the pullback, so price was retracing, and I was looking for a break of that low. As you can see, it hasn't happened. So looking at yesterday, it gapped lower. The first push that happened was up. Can you see? Up, up, up. And then we have the pullback right there. Same thing. So by 10 a.m., we have the pullback. It's retracing. And then that also timed out. So 30 minutes later, it's not triggered the trade. Cancel the order. Go and do something else. Let me just pop them full screen. So on the left of the chart, first run of the day, we've got the push, we've got the pullback, entry above the pullback high, waiting for that run. Again, first push of the day, the next day is down, entry below the pullback low. It retraces, it goes above this dotted line, so the trade's voided. Where are we? Oh, yeah, first push of the day, push, pullback, entry above the pullback high, it goes below the dotted line, cancel the trade. Push, pullback, entry above the pullback high, goes below the dotted line, times out. So again, no trade today. Same thing here, push, pullback, entry below the pullback low for today. To answer your question again, Zach, it's timed out and it's gone above that dotted line. So again, cancel the trade, come back tomorrow. That's it. So hopefully that explains why the first push in that 15 to 20 minutes, Zach, is what I'm looking at. Right, I think that's all the questions. I'm not seeing anything else. Perfect, perfect. Right, folks, that's my Apple peeler. A little bit of day trading love. Do with it what you will. I certainly will be doing what I want with it. It sets up a couple of times a week, as you can see there. It's not really set up that many times this week. It will keep you in the pattern day trader rules. It just means that, hey, if you're at the desk and it sets up, pop the trade on. If it's not there, as we've seen, it's set up once on Apple this week. Don't worry about it. So it's an infrequent way to day trade. You can go hunting for them, but then if you're newer at this really short-term trading, it might be a little bit overwhelming, which is what one or two of you have mentioned in the comments that have not read out. But this is just a low maintenance way. If it sets up, you can pop the trade on. If it doesn't set up, no big deal. And it's just a nice way to day trade without it being time consuming, without it being overwhelming, without you staring at the charts. I mean, to be fair, we've had the setup on Apple. It's voided, cancel the order, come back on Monday, enjoy your weekend. You know, it's been low maintenance. You know, if we'd been looking at Microsoft, maybe we would have got the live one. I wasn't logging out because I was explaining this to you. So you've all cost me money today, folks. Hope you appreciate that. But nonetheless, that's the setup. Let's call it a session. A little bit longer than usual. I think it was worth it. I enjoyed myself today. Thank you for your time. Thank you for your attention, as always. And that was my strategic mastery or strategy mastery session, whatever you want to call it. So just how do we think about strategies? It always starts with, where's my little thing? It always starts with an observation. And this is an observation I had years and years ago. I spent a long time trading the 5 minute, the 3 and the 5 minute charts, but mainly the 5 minute charts, and just trading pullbacks above previous days highs. You can combine it with other things. If you just want to look at 1 or 2 stocks, it's going to set up, you know, 1, 2 or 3 times a week. But if you've got your own idea, make the observation, pick a tool to help support your idea, make the observation, validate it, refine, validate, optimize. That's going to be a cycle, and then you can start to codify it. So the next thing that I'm doing, because I found a great coder, I certainly don't do it. I'm coding this up. You can automate the trading process, or certainly the alerts, and then it's codified trade and profits is the last part. And that's the phase that I'm on. I've got the strategy. I've got it working. I've revalidated my old idea, and I just want a little widget to go, Phil, go and place the trade, and then I can carry on doing whatever I'm doing. So happy Friday. Enjoy your weekend, and I will see you all at the same time, same place next week. Thanks once again for your time and your attention.